Let's take a look at some charts on Ethereum for Brave New Coin. We'll start with the hash rate difficulty, which has declined not as significantly as BTC. ETH's hash rate and difficulty adjustments are slightly different in that the difficulty adjustments happen much quicker than BTC. And ETH's hash rate has a lot of GPU hashing power behind it as opposed to mostly ASIC hashing power. I don't know the breakdown there. You'd have to do some deep research on that. But you can see since October it exploded. Since January it certainly exploded. And since May, hash rate has dropped from 585 to 451. I think that's terahashes. But in any case, it's down significantly now. Is some of this price related? Yes. Is some of this China related? Probably. Most of this is probably price related because miners were making hand over fist and kind of still are making money hand over fist, but certainly not to the degree they were in April and May. The dirty little secret of all of crypto is nothing can scale appropriately when it needs to. Everything's just either puking or zero. Right now, ETH fees are basically zero. Prior to this week, this month, in May, in April, it was a fee crisis, right? It was just nonstop rising fees, getting harder and harder to do anything on Ethereum. They were raising the gas ceiling. I suspect they're talking about decreasing the gas ceiling very soon. I don't think there's any problems with a dynamic gas ceiling so long as they vote on it and it goes through based on the need of the coin, right? It's not that big of a deal. Block times have increased slightly to around 13 plus seconds, but overall no big disruption here because those difficulty adjustments happen much quicker for ETH unless there's an artificial increase in difficulty that's baked into the protocol side of things, referred to as an ice age. And here are all the ASICs for ETH. You can see it's not an extensive, exhaustive list like BTC. There's even a few still coming, which I wish them luck getting those sold because I don't know what these are selling for, but getting your ROI on in a bear market is going to be tough when transaction fees are low and ETH price is declining. And oh, by the way, these are all going to be bricked for ETH once ETH switches to proof of stake, which it probably won't do anytime soon. It'll probably be 2 to 3 years, but that's always got to be lingering in everyone's mind. You know, you buy one of these, you break even in 2 years, great, right? But we're talking about economies of scale where you're buying, you're millions of dollars you're sinking into this stuff. This is at 4 cents per kilowatt hour. They're still extremely profitable, don't get me wrong, but mining profitability is a fickle thing. Obviously, difficulty affects this as well. EIP 1559 is also in the mix here, which at the end of the day may be less meaningful if fees are extremely low with that burning mechanism. I say a lot of this stuff assuming most of the people watching this video know at least some of the background information here. So if you're an ETH miner, you got a lot of stuff, a lot of curveballs coming your way very soon. Here's the pending transactions based on fees for ETH, and you can see it just got basically shut the chain down. Fees were just way too crazy in mid-May. Part of this was liquidation engine for DeFi on chain, right? Like there's no layer 2 DeFi stuff yet. So all of that happens on chain all at once, and it just goes blah. Fees go to infinity and nobody can do anything, right? If you look at the counts, as far as the number of pending transactions, it kind of just holds at 150K because over time it'll kick out transactions that have just been pending for X amount of time or X amount of blocks. I forget the exact rules there, but you can see how expensive these transactions were and how cheap they are now relative to those transactions in February, March, April, right? It was abysmal to actually use the chain. The other part about this is the more expensive transactions are, the more bullish things generally are because people are using the chain, they're speculating, they're gambling. This is everything you want to see. If you want price appreciation, if you want price depreciation, you bleed in the dark, right? Nobody cares about you. People get liquidated, they move on to other things for a variety of reasons, but a lot of people who are here are gone now, right? Like it's a ghost town. Here's daily gas used. We're still using a significant amount of gas per day. You can see the ceiling limits being raised here over time from January, but the total gas used is definitely falling significantly. And maybe there's a sweet spot right now where the ceiling is just right, but it's very Goldilocks in that You don't want unfairly cheap transactions, and you don't really want transactions that are forever expensive, right? Because then it just prices everything out. If we look at the gas prices right now, they're basically zero and have been essentially zero for most of this week, aside from Tuesday. And this is another problem. When we have this volatility spike, we see gas prices spike. So hopefully EIP 1559, when that goes through, can address that issue. And here's a view of monthly miner revenue with transaction fees plus the block reward. And you can see they were making, looks like around $2.3 billion in May. Just an insane amount of profitability compared to even January. Obviously all-time high in profitability there. And another thing you're seeing is GPU shortages just across the board, not only from chip shortages, but from ETH mining. NVIDIA loves to comment and mess with what the GPUs can be used for. But at the end of the day, so long as we have GPU shortages, people are going to still be mining ETH because that's an indication that it's still extremely profitable to do so. Now, this stuff is like late cycle where you see people buying $5,000 GPUs hoping to turn an ROI and then like never turning an ROI because the electricity costs just eat them alive. But to see the miner revenue decline in a spectacular fashion is another bearish indicator. Here's the average block size, which has been rising significantly even from January when all this DeFi stuff started to kick in, and sitting very near all-time highs for ETH on block size. Full nodes are around 8 gigabytes. That's going to, or sorry, 8 terabytes. That's going to become a problem eventually when most of the nodes are run by Infura or centralized. And, this is a talking point for BTC maxis, especially when we're talking about chain centralization, but it's true. The same is true with proof of stake. When a big percentage of ETH is just sitting on exchanges, that's not like the true vision of proof of stake, right? It's not exactly a decentralized chain at that point in time. Most of these nodes are in the United States, Germany, and France, and there aren't any nodes in China, at least on this list that I can see. That could be the Great Wall of China issue, Great Firewall of China. I'm not really sure. I should know that, but I don't. But they're definitely not on this list. ETH unique active addresses continue to increase. Nothing crazy like the all-time high, which was basically the previous all-time high in price. And you can't ever delete these addresses, so they'll always continue to increase. But none of that is really slowing down. So I think overall, that's more bullish than anything. Now, if we want to talk bearish, transaction counts down significantly from 1.6 million to just under 1.2 million. Can't be bullish on that. Transaction values have declined significantly. Part of that is just price depreciation in the near term. Part of that is the fees declining. You're going to see more low value transactions than you had been previously when fees were higher. But overall, seeing transactions down like that, extremely bearish. Seeing active addresses fall back to 600K is also bearish. You want to see growth on everything, right? And when you don't, when that slows down, or when you see this blow off top like you did in 2017, then that's definitely more suggestive of less insane bullish price action, certainly. One thing that does look okay is NVT, which makes me kind of think we're either massively oversold or going to be before this turns around, or NVT for ETH is just kind of not usable. We're essentially at an all-time low for 90-day adjusted free float NVT. So a lot of caveats there on what this is, but if we're looking for inverse metrics for utility versus market cap, this declining is certainly more bullish than bearish. If we look at MVRV though, in the green line here versus price, when we hit these previous all-time highs, MVRV was above 2, reaching for 3. This previous run we got to 2.2, and MVRV is another metric of on-chain utility versus market cap. So basically we were 2x greater in market cap than actual on-chain price movements, or on-chain coin movements rather. And in a bear market, we get as low as 0.3, at least ETH did, where much more of the chain was moving in notional value relative to the total market cap. So it's declining. It's got a long ways to go before it reaches for sub 1, which historically has been buy zone. Oversold is down here, right? Below 0.1. This gets juicier and juicier historically on backtesting as a buy. Just looking at some of my ancillary stuff here, total value staked in the ETH 2.0 contract is nearing 6 million ETH. So that's the amount of ETH that just is not in circulation. Certainly bullish in the near term, and bullish the longer they take to eventually release proof of stake. The more that this can soak up, the better, because it cannot be sold. It is locked until proof of stake hits for ETH. Exchange reserves still quietly declining, not as bearish as you would probably expect for something that's down over 50% from the top, right? Like for me, I'd expect some massive deposit going on here, but there's really not yet, which is almost scary to think. We're down 50% and deposits haven't really started to pick up in a big way on exchanges, and maybe they never will because of DeFi and DEXs and all that other stuff related to DeFi. But so far, exchange reserves just still flat. One thing that is problematic is ETH, the Grayscale product, is going more and more negative. So the discount to spot is growing. BTC got to negative 20%, the GBTC product did. This has to do, again, with locking investment schedules as far as when they can sell. So you potentially have a lot of people here who bought for some cash and carry ARB trade who are now underwater on that trade. And it got so bad on ETC that Grayscale had to say, all right, we're going to step in and buy, I think it was 30 million in this product. Unlike ETFs or maybe other stuff, this doesn't have to hold a level relative to spot. It can go negative whatever. Eventually people are going to start reaming them in the court of public opinion, and rightfully so. But you have to realize when you're getting into stuff like this with a premium that high, there's a reason, And that reason is these people can't sell yet. They're locked in for 6 months or 12 months, depending on what it states for each Grayscale product here. So if this continues to go negative, it's hard to be bullish ETH, because that indicates to some degree that there's institutional money kind of unloading, much like they did with BTC. Ethereum Google Trends past 5 years hit a mega all-time high in mid-May, down significantly. I mean, this kind of says it all. Retail is just not as excited about ETH as they were. Even if we look at NFTs, NFT spiked big time in early March, down significantly. So everything that kind of brought ETH to where it was, all that mania and euphoria, has waned pretty significantly from earlier this year. Flipping to technicals, we'll start with the half-year MA multiplier. Green zone historically has been the buy zone. Above the red has historically been a sell. We didn't get to that level though. This run, we didn't really get to it in 2017 either, which is why I'd almost rather just watch the 1 year 365. Now the 2-year MA is like the gold standard for BTC anyway, but that's based on backtesting. For ETH on the 1 year, this looks pretty good on backtesting. Sell zone up here, buy zone down here, and currently that's at 1200. That's a ways to go yet. So for me, like, I get more comfortable if we get down here, right? And this may take, like it did in 2018 through 2019, it may take 6 months to get out of that. It may take, in reality, 2 years to like turn up, right, on this indicator. But when it does, it just explodes. On the 20-week SMA, historically, it's very simple. If we're above, we're bullish. If we're below, we are bearish. This will be the first week that we've closed below the 20-week SMA. Very likely to close below that SMA. So it's getting more and more clear that we are not bullish anymore. Here's the 5200 in the green and the red here, as well as a pitchfork, VPVR, Bitfinex long shorts, and RSI. And we're just starting to lose the 200-day moving average. We're not even death crossed yet. So this could have a long ways to go. We're just starting and confirming bearishness up here. This is not like 2017 where we bounced twice, patterned out, and then went again. This does not look bullish on any pattern that I can think of. Doesn't look good. If we look at the pitchfork, a lot of people are going to laugh at this target. But 600 to 900, certainly possible should this retrace all the way down to the midline, which maybe it doesn't have historic precedence to do so. But I'm definitely watching that and will be watching that. Not really any VPVR support on Bitfinex until kind of sub 900. where it starts to kick in relative to previous levels. And ETH USD long shorts haven't really told you much historically. They all kind of dropped off a cliff in January, spiked a little bit recently, but haven't really had too much bearing on price. I mean, here we had all-time high in shorts at the bottom, and so there's definitely people got super excited there. It's hard to want to be bullish when we see long spike up here, so someone's trying to hold this at this level, but if this starts to creep lower and these guys start closing, it's only going to push this farther down. If you look at the cloud, we've been below the cloud since mid-June, so definitely bearish on that, and it's kind of it. That's the beauty of the cloud, like the 20-week SMA. It's instantly the health of the trend or which side of the cloud we're on. And we're not bullish again until we're above 2950. This is dynamic, so it'll drop down over time, but I can't just get bullish until we're back above the cloud again. Now, yeah, you can trade the ranges, you can trade lower time frames, but look at this daily trend. So from November to May, it was dead on accurate. And you can backtest this for many years and it'll be fairly accurate. So it's telling you now we're in bear territory, certainly. This is the 4-hour, probably the earliest that I'd want to get bullish on this is if we're back above the cloud on the 4-hour. And we're definitely not there yet. We had a chance in late May, early June, that got denied. There's potentially this TK disequilibrium here that will lead to a mean reversion, but we're really not bullish until 2900 plus. And I wouldn't confuse mean reversion with bullishness because a lot of people are going to see that as bullishness, get trapped, and then things are going to sell off again. Now this may form like a multi-month inverted head and shoulder situation where we pull back to 29, drop again to around 2K, and then back to 29 again. But that'll become more obvious over the next 3 months. And then on low time frame alligator fractal stuff, this has been bearish since mid-May, and we're breaking below these bear fractals. So none of this, you can't get bullish here. RSI is bearish, MACD's bearish, histogram's bearish. Maybe you can say there's a bull div starting here on RSI, but we're still making lower lows on lower RSI in a pretty convincing way. So it's not, it's not even oversold yet. We're not in oversold territory. So that's got a long ways to go. ETH-BTC looks super ugly. M double top. Pitchfork says lower. Yearly pivots say R5 was great. See you later. The big support's at 04, but I think 05 has a decent shot at holding in the near term. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool. You can send Ether USDC to the smart contract, or you can just watch what I'm doing. You can see AUM deposits, allocation, performance. You can see me get chopped up as I try to trade that range. Like I said, we were looking decent up in here. Adam and Eve, we were kind of double bottoming, and then we just drooped pretty hard. You can see deposits trades. You can see me flee to safety in Aave USDC, for example. And the DeFi portfolio currently no different in that it's pretty much all in Aave USDC. And we started this one early April, so we didn't even get a chance to kind of make a profit until all this stuff sold off rather quickly. But hey, we'll be here for a while when this stuff turns the corner. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.